The continent stands at the center of a modern-day scramble, and the prize is enormous. A lion's share of a growing $30 billion beer market. With almost 2 billion people and an average consumption of just 15 liters per person per year, Africa is widely seen as the last major growth frontier in the global beer trade. We drink just about 8% of the global beer volume, yet we are 16% of its people. That's the equivalent of every adult on the continent drinking 30 bottles a year, not much compared to Europe's 70+ bottles. That massive gap represents a goldmine for beer companies. This episode will bring clarity on the beer war raging across the continent. From Heineken's billion-dollar bets to the rise of local microbreweries, the aggressive takeovers from AB Inbev, and yes, your favorite beer brand. Surprisingly, Africa is not one of the fastest-growing beer markets in the world. Far from it. But what makes its beer market more interesting than others is, like all things in Africa, potential. Investors are not betting on what's happening now, but on what's coming. The continent holds a unique mix of shifting consumer tastes, booming demographics, and market innovation. By 2031, Africa's beer revenues are expected to grow by over 6% annually, pouring billions into the industry. But here's the catch. People are not drinking that much more. Consumption is crawling at just 0.8% a year, so who's driving the market? In terms of volume, a handful of countries are doing the heavy drinking. Namibia leads the continent in per capita beer consumption thanks to a deeply ingrained beer culture. Gabon holds the second place on this heavy drinker list. It might be a small country, but when it comes to beer, it drinks like a giant. In dollars, infrastructure, and influence, South Africa remains the continent's largest beer economy. In 2023, revenues were just shy of $4 billion, and they are projected to reach more than $6 billion in 5 years. Nigeria follows closely with a booming beer market. This year's sales are projected to reach $2 billion, with a staggering 10% growth rate through 2029. Ethiopia closes this list of booming beer economies with a projected sales this year around $1.7 billion with more than 10% growth. On paper, the African beer market looks diverse. From Cameroon's love for Castel to Zimbabwe's Chibuku, Kenya's loyalty to Tusker, Namibia's taste for Windhoek, and South Africa's Castle Lager. But peel back the labels, and the reality is far more concentrated. 4 multinationals control a ridiculous 95% of the continent's beer market, calling all the shots across borders. The Dutch brewer is making a calculated bet on premiumization, a strategy built around selling higher-end, higher-margin drinks, and it's putting serious money behind that bet. With a portfolio of over 300 brands, Heineken's African lineup is a mix of global icons and local champions: Amstel, Star, Mutzig, Heineken, Windhoek, and Nigeria's dynamic duo, Life and Goldberg. But brand strength is only one part of the strategy. The company is also buying strategic leverage. In Southern Africa, Heineken made a major move in 2022 by buying Distel and Namibia Breweries Limited. The deal gave birth to Heineken Beverages, a powerful new player in the region. It also brought well-known brands like Savannah, Hunters, and the delicious Amarula into the company's lineup. Critics see this consolidation as an effort to dominate the premium shelf, squeeze the middle-tier players, and outlast the budget brewers. A bold play to outscale the competition with branding muscle and distribution depth. And the push goes further. The brewer has invested heavily into the second most populous country on the continent and in one of the strongest economies in West Africa. In Ethiopia and Côte d'Ivoire, Heineken has built state-of-the-art breweries. These are long-term bets in high-growth markets, where modern infrastructure can lock in supply advantages early. And the results are starting to show. In 2024, premium product volumes across Africa grew by more than 5%, led by strong performances in Nigeria and South Africa. But the company's rise on the continent hasn't been without controversy. Heineken has faced scrutiny for its use of beer promotion girls in bars and, more troublingly, near schools. These tactics sparked widespread criticism and ethical concerns over how alcohol is marketed, especially to vulnerable groups. In response, the beer giant rolled out a brand promoters policy, aiming to clean up its image and regulate the use of promotional stuff. Heineken's African strategy is clear: build premium brands, invest locally, and assert dominance regionally through scale, influence, and carefully crafted appeal. But for all of its ambition, the Dutch brewer still operates in the shadow of the largest brewing company in the world, Anheuser-Busch InBev. The Belgian multinational owns over 500 beer brands, including the popular Budweiser, Corona, and Stella Artois, as well as some regional powerhouses on the continent like Hero Lager in Nigeria and Carling Black Label in South Africa, thanks to one of the biggest corporate deals in beverage history. In 2016, AB InBev finalized the acquisition of South Africa's finest, SAB Miller, for a record $104 billion. The South African brewer had a deep-rooted presence on the continent, especially in East and Southern Africa, with sprawling distribution networks and a strong consumer loyalty. By acquiring it, AB InBev leapfrogged from having minimal African exposure to instantly becoming the continent's largest beer producer. The ripple effects were immediate. In 2019, the company was responsible for 88% of South Africa's beer volumes and 99% in Mozambique. This kind of scale makes it nearly untouchable in several African markets. And much like Heineken, despite low growth in volumes, AB InBev is steering its consumers toward higher-end options. In fast-growing urban centers like Lagos or Johannesburg, these premium beers have become symbols of status. The company's above-core portfolio, with brands like Corona and Stella Artois, saw double-digit revenue growth globally in 2023. We tend to think premium products are a harder sell in economies where affordability trumps luxury, but the numbers tell a different story. Guinness is more Nigerian than British now, and that's no exaggeration. It's the country's most beloved stout, brewed locally for over 60 years. But why is the company behind the brand selling off African breweries one by one? Diageo, the British multinational, is the third largest player in Africa's beer market. While Nigeria remains Guinness' strongest hold, the company's African empire extends well beyond. In East Africa, for instance, it commands an even more dominant position. The company owns a majority stake in East African Breweries Limited, a powerhouse with a 90% market share in Kenya and strong influence across Tanzania and Uganda with its iconic beer, Tusker. In fact, the brewery contributes a massive 75% of Diageo's beer volume in Africa. But there's a shift underway. The company is moving away from directly owning breweries on the continent. It already sold off operations in Nigeria, Cameroon, Ethiopia, and most recently, Ghana, where it handed over its Guinness business to the Castel Group for $81 million. Diageo sees more profit in whiskey and vodka than in running costly breweries across volatile African economies. By offloading assets but keeping the brand, it turns beer into passive income, thanks to the growing demand and royalties from Guinness. Strategies are one thing, but how are they paying off? To really understand Africa's beer war, we need to follow the money. Let's dive into the financials of Africa's two beer giants, Heineken and AB InBev. Alright, let's talk about the money. Who's building the better, more profitable empire across the continent? On one side, you've got AB InBev, who's selling everything, budget lagers, fancy imports, whatever you want. On the other side, there's Heineken, sleek branding, premium craft vibes, a more exclusive lineup. So, who's making more money per beer sold? Globally, AB InBev is a profit machine. In 2024, they squeezed out a jaw-dropping 35% after costs, keeping 35 cents from every dollar of beer sold. Heineken, for the year, did a respectable but clearly thinner 22%. When we zoom in on South Africa, the difference is even more dramatic. AB InBev is crushing it. Sales are up and profits are flowing, thanks to Corona and Stella. Heineken is not so lucky in Mzansi. They had to take a $530 million write-down on the business, mainly due to low beer sales and ruthless competition. Thankfully for them, the acquisition of Distell gives their portfolio more flexibility in the country and allows them to rely on wine and spirit to counterbalance. But outside of South Africa, Heineken is gaining serious ground. In Nigeria, Premium beer sales are up over 30%, and in Ethiopia, after a tough stretch, they've bounced back with good volume gains thanks to cost-cutting and better distribution. Across Africa and the Middle East, Heineken pulled off almost 18% of organic revenue growth in the first quarter of 2025. What about AB InBev footprint elsewhere in Africa? Let's just say it's under construction. No major wins in Nigeria, no headlines in Ethiopia, and little visibility in Francophone West Africa. They've got scale, yes, but not yet the reach. Their digital B2B platform now powers 75% of their revenue transactions. That means real-time inventory tracking, smarter pricing, and tighter integration with distributors. That platform is like Uber for beer. Real-time demand and no wasted drops. Now let's talk cash and risk. AB InBev made nearly $60 billion in revenue last year. Their debt load is a bit heavier, but they also generated a monster $21 billion in free cash flow. Heineken's debt is lighter, giving them more breathing room to invest, even if their overall revenues declined by almost 5% due to currency hits. So here's the state of affairs in the African beer war. AB InBev wears the profitability crown, no doubt. They're kings in South Africa, and their operation is a well-oiled, digitized global machine. Heineken is the ambitious hustler. The company is not making as much money per bottle, but is growing in more regions, gaining share in West and East Africa, and building a strong premium presence. So who wins? Right now, AB InBev is more profitable, but surprisingly, Heineken might be better positioned. The African beer brawl is just getting started. In Francophone Africa, the battlefield isn't exactly wide open. The local titan, Castel, is holding its ground, snapping up assets from the big three and quietly challenging their dominance. Beyond the big names, a new wave is rising. From Freetown to Accra, Nairobi, and Cape Town, the craft beer movement is bubbling up. Independent breweries are tapping into local ingredients, from hazy IPAs to millet stouts and hibiscus ales, all tailored to local palates. What was once a tight, top-heavy market is now starting to fragment. As global giants and scrappy upstarts battle for every pore, one thing is clear: Africa's future is brewing.